All right, what is up, and welcome back to How to Invest in Commercial Real Estate. This is what we got, Brian. Hey. It's okay. Brian's upset. OC is still horrible.
Yeah, he's got to give back his season tickets.
We've got a new coach. We're in good shape now.
Did they announce who the new coach is?
Well,
I thought they just fired Gundy.
The interim.
Oh, okay. Yeah. Well,
Doug Meacham.
I'd love it if he wins. I'd literally love it. First game they win.
Yeah, that'd be hilarious.
Hopefully that.
Who are they playing?
Baylor.
Not a chance.
Not winning.
No.
Not winning.
A chance.
No, I'm not expecting a victory.
That's not even a prediction. That's just a fact.
It's a given.
Yeah.
Yeah. What do you think the score is?
I'm going to guess we'll lose by at least 30-something. So let's say, and we won't score very much. So let's
35-6, 35-7.
Yeah, something like that. Maybe 42-7.
Could be.
I could see that.
But I do have a little prediction to make. Crypto is way down today. Give me 60 days. Crypto's going to be up big time.
That one. Hey,
there it is. Mark it down, people.
Yeah, let's look at that one. I want to revisit that one because
big
I've been
time.
hearing this for how many years have we been hearing?
You shut your mouth when you're talking to me, Brian.
Can we quantify what big time is? It's got to be
one of his crypto predictions is going to come true.
It's got to be like 30%, right?
Just one.
60 days from now.
Yeah. What's big time? It's going to be like 5%. You're going to be like, bro, that's huge.
No. I'm going to talk. Bitcoin will be up 30. I'll say 30%.
30%.
And then I'm going to say altcoins. Selective altcoins will be up 50%.
Select altcoins. That's easy. I mean, you can go pick an altcoin that was up 50% today.
No, they're all down. Okay, I'll pick some specifics. Cardano,
Yeah, there you go.
Ethereum, and let's go with Solana up 50% 60 days from now. Boom.
Okay. After Thanksgiving,
I'll take that bet.
We're gonna visit
sure.
this.
I will take that.
You're betting against me. Is that what you're saying?
Yeah.
Okay. How much are you betting? Put it down.
$100 that it's all less than that.
Okay. I'll bet you.
60 days from now. All right, we're on. All right.
All right. Let's go with some updates on real estate.
Well, Powell either did what he was told or what he felt was necessary. But we finally got that 25 basis point interest rate cut. Didn't really do a whole lot to the Treasuries. If anything, it increased them. Yeah, everyone had kind of already baked it in.
Did we get inflation numbers today? Because I didn't have time to check.
I didn't see.
But those are supposed to come out today. That's going to be important to understand. If inflation stays low, likely to see another rate cut or two before the end of the year. If inflation's creeping up, then that may be all we get this year.
Well, and if the job report keeps going down, right? I mean, if it stays bad, we might see another 25%.
Yeah, and did you guys see the thing about the $100,000 H-1B visa thing?
Yeah.
Seems like a dumb idea.
Yeah, that's pretty strange.
Yeah.
I mean, it's a complicated issue, so I'm not going to try to know all the angles.
But I just did in a couple words?
Yeah.
Yeah, okay.
But, the H-1B visa, if I said it right, maybe, but that's a process where America brings some of the world's best and brightest into our country to boost our technology, to give us a competitive edge. And so I don't have a problem allowing those people in because it's a net benefit for us, in my opinion.
I thought you had to prove also that you couldn't find that same person that knew that technology within the United States. You couldn't.
Yeah, there's
so you had to go outside.
There's some parameters.
That's to your point. It's the same idea.
And the idea is that like Meta and Google and Microsoft easily could pay this fee. The idea is that it's discouraging new technology, new startups, people that may not have that capital. It's a really good resource.
Yeah.
Okay.
Right. What about Criterion updates?
I think we've got some sales coming up. Next sale coming up is Smith Farm 1, the Payway Kava building up in Owasso. That's on the Solid Go. We already sold.
Yeah.
Payway Kava building is supposed to close here in a couple weeks. They're already non-refundable on the earnest money. So that's great. It's going to look like a 11, 12% IRR. It took a little longer than we thought, but 135 equity multiple is what I projected out yesterday.
Yeah, not what we projected in the beginning. This was one of our first developments. Didn't have full control. Definitely had some challenges along the way and still are going to end up profitable, even though it took a lot longer.
Yeah. So is that the completion of Smith Farms 1 with that sale?
Yep.
So at that point, where investors are getting all their money back plus the profit.
Yep. 99% of it.
Yeah. Nice. Okay. But yeah, Joel, like you're saying, this is one that we kind of learned on. And it's interesting because we feel like this is really one of our worst deals, right? Mm-hmm. And it's an 11% return.
It just took longer, right? We had leases out to Mod Pizza and Orange Theory. Both got bought by private equity groups, which you can't really foreshadow or control. And then they bought out of their leases. We had to go back to the leasing market, get new tenants in, get new permits and construction drawings and LOIs and leases. It's just a decently time-consuming process. You hope you can do that on the front end. We did do it on the front end, but we had to start over.
So it wasn't really a construction delay. It was actually a lease delay, commitment delay. Is that right?
Yeah. At the end of the day, we're relying on the tenants to go in and not only build out and permit their tenant improvements, but to be ready. So when we hand over the shell, that they can start work immediately to get to the goal of opening, right? Because without producing sales at that location, it's hard to pay rent. So you obviously communicate a lot on the front end to line up those things, but at the end of the day, if they're not willing to invest the money to build it out, and we got buyouts from these tenants, but again, you're spending it in time delay. So had we done this in 18, 24 months, had we thought, if we had these tenants lined up, we could have easily done that. It would have been a fantastic deal. You're looking at a 17, 18% IRR. Great deal. Anyway, we've got the Aspen Dental that is being finished up any day. If you're in that deal, you've gotten really good weekly construction updates. We took that out to market, really strong showing, according to the shop company. A lot of people digging in. We haven't gotten offers yet, but a lot of people downloading the OM, requesting the lease and all of that stuff just to sharpen their pencil. So we think that's
essentially finished on the construction, right? We're just waiting at this point, we're waiting for offers.
We've delivered substantial completion. They're blowing and going on tenant improvements. They should be open realistically in the next month, give or take 10, 15 days. So yeah, I'd like to think we have that, LOIs within the next 2-3 weeks. Yeah. We have 2 TLEs on the market. We have the Grand Prairie one, which is open. We have the Burleson one, which is going to be open any day. We've turned it over. The tenant improvements are complete. They've started training in there, whole kit and caboodle. We're just doing the final punch list items that the city is making us do to get the certificate of occupancy. Right now, we just have the TCO. But anyway, we've gotten 2 offers on the Grand Prairie one. Whichever one doesn't get the Grand Prairie one, we'll most likely just shove them over the Burleson one. Still getting active feedback on them. But anyway, that was a good sign.
Yeah. And then we launched new development in DFW Metro.
Yeah, Granbury and Hudson Oaks, 2 brand new retail strip centers, both anchored by 4,000 square foot Hollywood Feed, which is kind of an small upscale pet supplies place. Pet stores used to be huge, and we've got some big ones. Like the old school PetSmarts are like 15. They used to be even bigger, 15,000 feet. But I like the 4,000 square foot pet stores.
It's a higher end, usually in really high demographic areas where people are willing to pay a little more for the higher quality stuff for their pets.
Yeah, I think they deliver this dog food, cat food, whatever it is. Anyway, we've got a Dunkin' Donuts in one of the centers. We've got some other tenants, a little bit of it blends together.
We got some other tenants.
We got some other, I can't think of them.
I thought we had Dunkin' Donuts in both of them. But
I thought we did too.
So, I think we're in the middle of that raise. There's a little bit left. By the time this airs, if someone sees it and wants to get in, they better jump on it, I would bet.
As of now, there's like 1 million left. I would like to think it'll be full before. It'll be really close.
But we've got a great kind of a neighborhood shopping center coming out early next month.
Yep.
And it'll be a decent sized equity raise. So there's another deal right behind it.
Yeah, and what I was going to say on this new development deal we're launching is we're building in a lot of these quirks, I'll call them, that we found in the merchant retail development. We're kicking out the expected timeline to 24 plus months on this one, just to say, hey, we're probably not doing this in 18 months. If we do it, it'll just be a better return. We're building in more costs to the budgets. We're more strict with the lenders. We're bidding and permitting and getting drawings way earlier. So we're getting better at them by eliminating, weak spots that we found. I'm sure there will always be a new weak spot that we will find. But I'd like to think we're learning.
That's something everybody has to appreciate is, every time we do a retail purchase, we learn some additional facts about buying retail. And so I'm way better at it today than I was that first retail center that I purchased. And along the way, we just continue to learn so much. And some of these lessons you just can't learn without doing it, without buying, without going through the pain. And then once you do, it kind of sears in your memory and say, okay, what would I do better the next time? And so that's why we apply all those lessons when we're out looking for shopping centers. Okay, I don't like the way it sits. It's not facing the street as much because we struggled on this deal. It didn't face the street. It was kind of back off the street, and it was harder to lease. We don't want that one. And that big box, okay, it's really high rent. And so if they bail, we're not going to be able to replace it. We're going to take a lower rent. It's just things like that. So we're always trying to get better and learn every single time we do a deal. And the same is with the development. We're getting better, and we will be better on future developments than we have in the past. So,
no doubt. We started to go into it, but the Midwest City deal is out now as well. I don't know if it's been officially launched, but if you're interested, definitely hit us up. We'll add you to the link. It's a generally stabilized shopping center in Midwest City. We have 3 or 4 different out parcels that we can sell.
We have tenants.
Yeah. We have tenants. Yeah. So I was telling an investor the other day, our bread and butter is acquisitions of existing neighborhood and community retail shopping centers.
Absolutely.
We can model those fantastic. We get really close to the underwriting on those. We have experienced a lot more volatility in the merchant development, like we were just kind of alluding to there. That being said, we've had some of the best returns we've ever had on that side of it. Yeah. We've had the opposite end as well. So a lot of volatility in that, and we're trying to even it out. But yeah, the value, not value add, but the neighborhood and community shopping centers, man, those are just.
It's nice to start earning cash the day you buy it.
That day.
And you're not dependent on city permitting and tenants following through on the leases that they signed.
It's just, it's done.
Interest rate risk, market risk. Like when you buy it, they're paying, you're making money. So a lot different deal. Okay,
one more update. Didn't we get some offers on Kitty Academies as well?
TLEs, we already talked about it.
Yeah, Brian.
You said Kitty Academies.
No, you kept saying Kitty Academy.
No,
I kept
didn't
saying
say it.
I heard him say TLEs.
Yeah, Brian's
when he
it.
said TLEs, I'm like, maybe you should say the learning experience because people may not know. So I definitely think you said TLE.
I did.
All right, moving on.
Okay, we already sold the Kitty Academies.
Yeah, we did. We did.
So we've got some market kind of updates for you guys, not Criterion updates, but we just thought we would kind of talk about the market because we're in a little bit of a transition. We came out of COVID. We flooded the market with all the excess cash. Prices spiked, then inflation spiked, then rates spiked, and now we're kind of coming out of that period. And we want to talk about what's going on in the market today, especially with retail, because that's what we focus on. And so, Brian, kind of walk us through some of these, and we'll talk about them.
Okay. By the way, that was a great summary of the past 6 years. I mean, you really hit all the
15 seconds.
The macro. I hit the macro.
The highs and lows there.
All right, these are Q2 statistics, Q2 2025. So median price of commercial properties up 5% quarter over quarter and up 14% year over year.
Yeah, that's pretty good. That kind of fits with the higher inflation that we've seen, and that's across all markets. I think retail averaged as much or more than the average.
Yeah, so retail actually was the leader in that group quarter over quarter at 10%.
Yeah, that's great. So we own a bunch of retail. That's fantastic.
We told you guys months ago to buy because it was getting more expensive. Play it back.
Yeah.
We told you.
Yeah. Let's see. Debt maturities coming up. $1.8 trillion in 2026 comes to maturity.
That is crazy.
It's a big. I don't write 1.8 T very often.
Yeah, so
that was an interesting.
So for the idiots in the audience, that is $1,800 billion worth of loans maturing, and most of those are going to be at lower interest rates than the interest rates today, which is going to put some owners in a little bit of a bind. And we're hoping, it may cause a little bit of market pressure, downward pressure, but we're looking at it as opportunity to buy maybe distressed assets or motivated sellers.
Here's the thing, guys. When you don't have to sell, a bad market is fantastic freaking news, right? Because you go buy a bunch of stuff and you're smart enough to know history repeats itself. The market's going to get better and then you sell. Anyway, sorry. I get a little hot there.
Yeah.
I did. I'm
excited.
passionate. I'm passionate about it. Okay.
Okay, so those retail winners that we were talking about, grocery-anchored shopping centers.
Yep.
Right? That sounds familiar, right?
Yeah,
Shadow anchored?
grocery anchored works because in COVID and just kind of throughout history, people are going to buy their groceries, right? People are going to always pay their rent. Like that's the first bill they're going to pay is where they're sleeping at night. The second bill is their grocery bill. You know, you got to have somewhere to sleep, you got to have somewhere to eat. So because of that stability, the REITs, in institutional investors of the world, that's what they buy because you can't mess it up. And when you've got that many billions to place, you're not really looking to make tons of money. You're just looking to make sure it doesn't go poof.
Yeah, and think about a grocery anchored center is people are typically buying groceries at least once a week. Maybe they may even go to the grocery store more often than once a week. So you've got this.
I feel like my wife goes to the grocery store every freaking day.
If you have
Every
multiple
day.
kids, you might be going several times a week. So you have this traffic that's coming into the center multiple times a week. And if you have a big anchor that isn't grocery, and maybe it's some random clothing store or something like that, they may go to that store once a month or once every 3 months. It's not as active. So that's why grocery is strong. Yeah. And there was a couple others on there that I think fit with our portfolio too.
Yeah. Fast food dining.
Okay, well that I remember that too. That's a really strong sector that's doing well. Fast food, service,
Essential services.
Us Americans, we got to eat that fast food.
Yeah. Essential services like pharmacies,
discount stores,
neighborhood shopping centers.
I feel like we're seeing a
restaurants.
a bit of a shift in pharmacy a little bit though. I mean, I'm seeing Walgreens go out like a hot sack of rocks.
Yeah, they kind of hit their peak and are working their way down. I mean, they still own a bunch of really good real estate, but they have a lot of dark stores. And when I got into the real estate space back in 2006-ish, 2007, like Walgreens was the hot topic. Everybody wanted a Walgreens at 5.5, 6 cap. And now people can't give them away at an 8 or 9 cap. It is crazy, the shift. Imagine if you bought it at 6 and you have to sell it at 9. You're totally hosed.
Yep.
I just never find myself in a Walgreens, literally ever.
Well, all it is high-priced goods that you could get for cheaper at a grocery store, but because it's a Walgreens and it's on the corner and you can get in and out of it quicker, they can raise the price by 30%. That is literally the ticket.
You pick up your prescription.
Yeah, you used to go, I need some milk, I need Diet Coke, and I'm going to pay 20% more, 30% more. And in your mind, it doesn't seem like that much because the milk is, I don't know what milk costs, $1.50, $2, whatever.
This guy thinks milk costs $2.
I have no idea what it costs.
I'm surprised. You said your wife does
shopping. But
I know it's way more than $2.
Okay, but let's say it's $5, but you add 20% out, $6. Like people just don't care enough, and they pay, and that's that profit would have go straight to the bottom line.
The next segment of this podcast is impromptu, and it's how much is a gallon of milk?
Yeah,
I'm gonna say $8.50.
Oh, come on! I would not know. That would be crazy.
You go.
Yeah,
$5.
I'm gonna say $3.56.
$3.56. Man,
for Walmart, 2%.
Okay, that's
Great value,
that's 2% milk. What are you talking about?
So we should do this.
Why it's so
we
cheap.
should do this, Aaron, for the next show. Like, let's pick 10 items that people routinely buy at the grocery store. No cheating. You can't go check it out, and just ask us each independent, and let's just see. Because I literally don't look at the prices, and I know people do, and I'm not discounting that. I just don't know what it cost.
How much is it?
What does it cost? All right, go ahead.
Okay,
Brian.
real quick. The other retail winners. Neighborhood shopping centers or neighborhood strip centers. Does that sound familiar?
Which is what we build and buy, strip centers, which I like. Those are doing well because they're small footprints for businesses that don't want a lot of square footage, but they want that frontage, and they're easy to get in and out of.
Mm-hmm. Automotive, like we did in Nevada.
I mean, totally e-commerce resistant, right? You're never going to get your car fixed or your tires changed online.
Yeah. E-commerce, but not e-car.
Yeah.
Okay, can we cut that joke out, please?
Dude, you drive a Tesla. When's the last time you went to get your oil changed?
That's true. Never have to do it.
Yeah.
Last one that I have is power centers with smaller tenants around.
strong anchors with a bunch of inline, which is other type of centers we buy. Okay, what else?
Okay, so, and then some of the hot takes, the debt rollover war, we already kind of talked about that, the 1.8 trillion, office's history, basically, right?
What was the line? Let's give the hot take line. We came up with it.
We're just going to take it off of the asset class.
It was offices gone. That's what.
Okay, yeah. I mean, office demand isn't zero, but if you don't have a really compelling story for your office building, you're going to struggle. There's just too much on the market.
So there's retail, industrial, multifamily, and land. That's it. Those are your 4 asset classes.
And then lastly, we looked at some hot areas, DFW, well, all the Texas metros, Florida, mostly Miami and Tampa, Salt Lake City, Nashville, and Raleigh-Durham were some of the ones.
Yeah, those are some great markets. We're looking at some deals right now in Florida. We are doing a ton all across Texas. So I think we're well positioned there. We've got offices in Fort Worth and Dallas. I would love to be in the Raleigh-Durham area. That's a really great area, but we just haven't found anything that was compelling on price. But
we will.
North Carolina's taxable state. I don't know what it is. I don't think it's tax-free, is it?
Don't know.
I don't think so. Florida and Texas, tax-free, definitely an advantage when you look to invest there for sure. I mean, at some point, these things are going to roll a profit.
Well, that's all I got.
That's it?
Yep.
Okay. Let's see if there's anything else interesting we want to talk about. OU, man, we're doing so good. We're like 7th, 8th in the country. Quarterback,
arguably because we're cheating.
Yeah,
that's true.
There was that controversy.
No, it was cheating. It was ruled.
I think it's open for some debate.
Yeah, there's nothing we can do about it. So screw you guys.
Well, we have a bye this week, so our quarterback being out, fine. Then we have another bye week called Kent State. And so I think we're gonna be fine there.
You say your quarterback's out. What?
Surgery on his hand.
Oh, I didn't know that.
We have a pretty good backup, though. I know last year he was a true freshman and he struggled a little bit, but he was one of the best recruits in the country when we got him. He had offers from Alabama and Texas.
Ooh.
And he's a super great runner. Hopefully he's had a year to what?
He turned down the Oklahoma State offer?
Yeah, he must have turned it down by laughing out loud.
Do you know who won the Kansas City Eagles game?
Not Kansas City, I don't think.
The Eagles won again?
I think they won, yeah.
Kansas City's 1-2, and Baltimore is 1-2. And I think they play each other this week. One of them could be 1-3, and that would be crazy because they're Super Bowl contenders.
Yeah, it'd be crazy if it was the Chiefs, too.
Yeah. All right. Anything else, guys?
Nope. I think that's it. We'll see you guys next week on how to invest in commercial real estate.